What is up, guys? Welcome back. In today's video, we'll be taking a look at Microvision and their crazy recent price swings. Now, before getting started, it would be greatly appreciated if you could leave a like and subscribe. We just opened up the channel and it helps out the algorithm. Now, without further ado, let's jump right into it. Microvision is an American company that develops laser scanning technology for projection, 3D sensing, and image capture. They went public in 1996 with a listing price of $42 per share. They had what looked like a short squeeze in the year 2000, where the share rose to $510 per share. And then in the following year or two, it just fizzled out, back to under $40 per share. Since then, it's been a fairly boring stock, trading sideways below $40, and from 2010 to 2018, they were lucky to break $10 a share. And this month last year, they were trading at less than $1 per share. This Monday, Microvision closed at above $26 per share after a 47% daily increase. This was followed today by a 25% pullback, breaking all key supports on the way down. In the last 2 days, this has been the most mentioned stock on Wall Street Bets and StockWits, and according to VanderTrack, it was the most bought stock by retail investors on Monday, accounting for $56 million net basis retail buys. This was also the most traded stock on Fidelity this Monday. One Wall Street Bets user YOLO'd $1.5 million in Microvision shares yesterday, and I think I saw him shaking a coffee cup outside my local McDonald's earlier today with a 20% short interest on free float. This shows the stock is pretty bad as it's being shorted very heavily, but this rate does also leave the possibility of a short squeeze that could go very high. The question is, has the short squeeze already occurred last week, or is this just the beginning? I feel the majority was already squeezed over the last week, but squeezes also tend to come in more than one rally, so I wouldn't be surprised if we were to see another spike before it goes back down to what it is actually worth. One piece of bullish information the company has come out with is that their new line of LiDAR sensor technology, which has been in development for 2 years, will be released soon. The aim of this is to accelerate development of autonomous driving features. Today was the first drop in 5 trading sessions. The company have their Q1 earnings on the 29th, which should cause volatility. Short interest aside, this is a massively hyped up stock currently, so a positive earnings may lead to increased retail buys and another price rally. During yesterday's rise, the price consolidated at 3 levels, causing a bullish support. These were around 22.50, 21.50, and 17.50. The first 2 of these supports were broken today, making the chart quite bearish looking. As far as the financials go, Microvision has a $3.11 billion market cap with an average volume of 19 million. Their EPS over a 12-month period is 0.10, and it has consistently been dropping by almost 30% each year. They have a $600,000 revenue predicted to be reported on Thursday in earnings. However, keep in mind that the company's revenue in the last 3 years has fallen from $17 million to $3 million. Both these trends showed the company is losing profitability, if it even was making a profit in the first place. I'm not surprised they were trading at under $1 per share this time last year. They're not a good company and they have a decreasing value year over year. Analysts expect the firm revenue to increase dramatically over the next 2 years, but in my opinion, this would only be down to a major EV manufacturer picking up their LiDAR technology, which is not a guarantee. Other than that, they don't seem to have much going on for them. This is a company with very little intrinsic value. The rise in share price recently is down to short interest being covered. This stock has a fair value of less than $10, if not $5 a share. However, I do expect another rise, which may be significant, but this is simply due to the attention that retail investors have been giving this stock, and any short sellers that still have to cover their positions. On paper, it is a company with declining value who seems to have one Hail Mary shot at huge growth, which is their LiDAR technology. I feel if they were to achieve consistent share growth, they would have done so over the last 27 years they have been listed. My advice is to watch for a potential bull run coming again, and when price starts to decline, purchase some put options. This is a stock with a lot of support which can increase price, but the company itself is not something I would be bullish on. This is a prime example of what groups like Wall Street Bets are capable of doing short term, as they have again caused a massive price spike which does not reflect the underlying firm's value. I do not think this is the next GME, as hype is temporary and it can only do so much. Then again, this is only my opinion. Thanks for watching and have a great day.